Okay, this is the Orderflows market review for Wednesday, May 11, 2016. My name is Michael Valtos. I'm the founder of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so this morning, it's kind of a quiet morning. Actually, most of the session, and there was no numbers. I know at 9:30, the petroleum numbers were coming out, and I was hoping to be able to get a trade before then. Now, there was one that set up, and this is in the bonds. We had been coming down. You can see we're coming down into our low. We touched our low, came up, then we hit our low again, made a new low here at 165.11. The first time we hit this low here, you did it, but you got no ratio there. The second time you did it, you've got a ratio, you got a divergence, you got the single print. For me, this is what I like to see. I like to see the blue number, I like to see the divergence. Ideally, point of control, it's right along the bottom. It's one tick off the bottom, which is another thing I like. I don't really talk about, points of controls where they are in the bar, where I like them, but I do like them when, if it's a green candle, if they're appearing at the bottom or towards the bottom. So I got long here at 16. Now, at this time, S&Ps were sort of going nowhere. We're in the middle of our range in the S&Ps. Cash had been open for about 20 minutes and the market was going sideways. I got in at 16. Originally, I was looking at 21 as my area to get out. And, I know it was a slow day by just watching what was happening in the S&P market. Now, what I saw developing here was some decent size. It ended up trading, 1,348 here at 20, but there was somebody in here with size, and I saw that early. I saw 600, that it was 400 and 500 and 600, but it was sort of stalling out, coming in here, then going, went down, even went 19 offer. And, S&Ps were still sort of in the middle of our value area for the day. And it was a quiet day. So, there wasn't really much move in the market. It felt like at this time, I just ended up getting out at 20 rather than 21. Yeah, it would have been nice to get out a little bit higher. But, at that time, with the S&P sort of doing nothing, and I see a big seller up here, I don't want to fight this guy. I'd rather, if I could get out, hey, that's great. It's 4 ticks. It's not the full, my full 5 ticks that I wanted to get out of here. But again, if this volume was going to hold, we could easily just drop back off, and I might have easily, broke even, got maybe a tick or 2 out of it. But, 4 ticks, 5 ticks, you got to decide, do you want to fight the size that's there in the market or not? I chose not to. But there was something else that was setting up here, and it was something I noticed a little bit later. You have this, ratio. This is what I often talk about. The 3 in a row ratio. I like them off the lows. Now it was coming up into 9:30 when the the oil inventory numbers came out. So, I'm probably a little bit hesitant to be looking to take a trade around there. I'll say now, yeah, it worked out, but honestly, I didn't even think about taking that trade just because of the number. It was going to be coming out, in this area in here, and the market could have gone either way after that. Now, it sort of took the long way around. It sort of took, so even if I'm getting long in this bar at 9:30, by 9:50, I'm still not getting paid so much. By 10 o'clock, it still hasn't really made the move. It was just sort of hanging out, a little bit underwater, a little bit around break even, before it started, before it started moving up. Now, a little bit later, this is not a trade that I took, but again, you got the 3 in a row. You got a little bit of a pullback in here, and then it went back up. Now, I often say taking things into context. I'd much rather be taking a trade, getting long, finding a long trade off of a low rather than off of a high. That's just me. I said if I'm buying, I prefer to be looking to buy closer to the low than be buying somewhere around the high. Even though the markets, can go higher, and like in this case it did. But for me, I just prefer to get in, have this set up a little bit, lower. Now, granted, for most of this morning, it was a pretty tight range. 165.11, 166 even. When you took out that high. So again, in a tight range, are you going to be really interested in looking for the breakout? I don't know. Yeah, it may come, but again, this is 10 o'clock here. 10 about 5 after 10, 10:08. It didn't really break out for another hour. So it just sort of gives you an idea how kind of quiet the day was. Now, this setup happened pretty fast. This bar is 9:58, 10:01, 10:05, boom, 10:08. You get your signal, or around 10:08 you get your signal, and you're getting long. And then what happens for the next hour? You're just sitting there, taking heat. For me, I don't like that. I like the trade to happen sooner rather than later. Okay, so moving on. This is the E-minis. This is the 5 range chart. Yeah, and just sort of talk about the day that we're having yesterday. I don't know if you could even tell on the volume profile, but most of the morning, you're before you put in this volume down here, this was your value area, and we're just sort of trading around there, most of the morning, until 10 o'clock basically. And it was interesting because you're getting some decent volume numbers, some decent imbalances. Usually 2719 is a number that I like to trade around. In an individual big imbalance. But you're buying it right at the days, around close to the point of control. So if you're looking for a move, you're gonna be running right into the the high volume area for the day. So I like it, but again, in context to the market, it's in the middle of the value area. I'd prefer to get it as you come down and hit a low, start to come up, and then you get the aggressive buying. When we started coming off here, I saw this big imbalance 3,317, which I liked because we started breaking outside of the value area. Now the low for the day is just right here at was said here at 69.5. This is happening at 72. However, I thought about it actually, but again, am I going to run into some support down here? It's the day's low, all right? And at the day's low, you often find support. Now, what I thought was very interesting, I talked about this in the room. I didn't take this trade just because this market was too boring yesterday. Early in the morning, around 9 a.m., there just wasn't anything going on. That was worth taking a trade. Even if I thought, if I was going to take this trade, I'm getting long at 2, I'm going to trade back up to around 74. Okay, well, is that such a good trade? I didn't think so. But, we had worked our way down. You didn't get down to the low, but we got down to this low level here at 70.5. You got a ratio, 57.62. Then I got this buying imbalance, 1548. And you got some decent volume above it. But then again, here a little bit later, you got this other one. You can just sort of see the market coming down. Your value area, you didn't put in this volume yet. This was your high value, your high volume area. This area was looked like this up here, but down here at the time. And, on your normal distribution day, you're going to be looking to buy, somewhere a little bit around the lows and for a move back up into, the value area. But for me, it was just a little too tight. Too congested this morning, so I didn't take the trade. And then a little bit later, again, you're getting another nice number here, 1694. So you can see Yeah, there are buyers down here. You're sort of shaping up to rally back up towards this value area and hopefully get on the other side. Then you get another one here, 2000. I remember looking at this, but then, keeping an eye on the time. I know you got the oil inventory numbers about to come out at 9:30, and they did. The market popped up. Okay, boom. And it was very, not a lot of volume there at the time. Now we got up to this, about 8 minutes after. We came up towards the high at 78.5. You got a ratio there. And but what was interesting is you had some very nice big volume numbers up there near the high. 5,000 here, 4,000, 4,000, 4,000, 4,000. And, to a lesser extent in this bar, 3,000, 3,000, 2,000. If you remember yesterday, when you got up towards that high, this is yesterday. This was around the cash close, so you're seeing a lot of volume. But, you're seeing, 4,000, 6,000, 7,000, 6,000, 10,000. At the cash close, you got, 14,000, 8,000, even 13,000, 11,000. But then, you go forward a bit and you're getting up towards that level again, and you're seeing the heavy volume coming in there to act as resistance in the market. And the market came down. I honestly, I thought it would just trade down to 74, sort of hang around there, and then, try and go back up. But nevertheless, it just kept going right down, 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 down into the low. It took out the low for the day. I took this one little trade here. It wasn't the greatest trade. It was, just off the low. I saw we had a ratio. You had a very big imbalance. I had the Delta scalper kicking off. I got short. Not the greatest entry, 70.5, and it just went sideways on me. And I ended up covering it here at 69.5 for a point. But it was just hanging around my entry price more or less, and maybe a point against me. That I felt hey, if I could just squeeze a point out of it, that'd be good enough. I sort of had to sit through this little buying imbalance, but it was I don't know, it was a strange day. I did feel that we should make maybe a run towards the low, which we did here, and that's why I was able to keep in that position until we got down to 60.5. Which is good, because eventually we started turning around back up. I didn't watch the rest of the day, but we did have this low down here. With a couple of, you have a ratio bounds low, some decent volume there, another ratio bounds low. This time is a small print, but they didn't hold, and then the selling just took over. You could see the the imbalance is just getting bigger and bigger. Normally I would like this trade, and had I been around here, I probably would have taken it and taken a loss on it. Then the market just went lower, 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 and that was it. I wasn't in front of my screen at that time, but I wanted to record this because I said yesterday in the room I had some problems. I had to restart sort of everything, and I forgot to record the session. But I mean, those were the two main trades that the one main trade was the bond. The other one was just sort of a, I'll say flyer, but it was just a trade that I said it really wasn't much that I really wanted to trade yesterday in the S&Ps. I saw this. It's just sort of a culmination of things. The ratio, the big imbalance, the Delta scalper. The problem was it was coming into the low, so and it was struggling after I got into the position. So that told me, hey, maybe it wasn't going to work out as the greatest trade ever. But if you get something out of it, then that's great. Okay, but one other market I wanted to talk about real quick was the corn market. Yeah, I talked about it in the room. It was a bit quiet yesterday, so I was showing some examples in other markets. And this is the corn. This is July corn. It's a 4-range chart. You come down into the low at 920 here, and you had a nice big stopping volume, at 1030. So you got a ratio bounds low, and the market it put a nice little rally up. You hit this single print here. We sort of came off a little bit, came right back up to that level, got through it. You can see we put in some good volume here. Then we came up towards this other single print up here before selling off. Now you can see the imbalances coming in, but really, this one really stood out, quite strongly yesterday. So, whether it's bonds, S&Ps, corn even, I'm still looking at the same things that, in order flow, you're looking for the market to move from, from ratio to ratio, so to speak. If it's going to be a reversal, right? If it's going to be a continuation, obviously that's not going to be a reversal. Like this one would be a continuation. I'd look at this as continuation of this move down. You're getting a couple of ratios up here, that are looking like, we hit the low, sort of coming off, but you're seeing price being rejected up here. Here you got the single print is 3 lots. I got a ratio of 139, and the market starts coming off. You get a ratio bounds low, you get some volume in here, so you can see that there's sellers coming in here working offers on the way down. In markets, people think that just because a market falls because there's everybody hitting the bid. Well, lots of times on the way down, people are working offers. They're putting pressure on the market. They're capping it. They're holding it down with their offers. If they get filled, great. If they don't, their offer's still there. Maybe if the market pops back up, they'll get filled. But they're looking to get short at this level here. And we come down, we hit this level. You hit some very strong volume here, 1030. You got your divergence, you've got your ratio, and it sets up for a decent move. It's corn right now. It's not really moving around that great. In the summer, it'll probably get a little bit more volatile. But it was a decent move. It was 3 cents. It's not the greatest move, but it's corn right now in May, in the month of May. So it's right now it's not as volatile as it normally is. Okay, so thanks for watching this video. So if you want to learn more about trading with order flow and software used in this video, be sure to visit www.orderflows.com. Thank you.